Hello, and welcome to part 3 of our discussion of depreciation. Alright, I'm going to start on page 711 in your book, and this video will discuss depreciation of real estate. Okay, real estate is divided into two types. You have residential real estate, and you have non-residential real estate. The tables for both of these are on page 7-12. Alright, and are both in table 7.5, with residential real estate being the top part of the table and non-residential real estate being the bottom part of the table. Okay, real estate is defined as either section 1250 property if it's really old, like back in the 80s, alright, or section 1231 property. Alright, 1231 property is a capital asset type property, all right, of which real estate is not really a capital asset, but it's given capital asset treatment if you hold the real estate for more than 1 year. If you purchase real estate and then you sell it within 1 year, any gain or loss that you have is treated as ordinary income. Okay, all right, so back to page 711. All right, it tells you on there that real estate is depreciated using straight line depreciation over 27.5 years for residential and 39 years for non-residential. Okay, the tables on page 7-12, okay, if you look at the table, you are going to see 12 columns. All right, the column is the month that you purchased the asset in. Okay, so I am making this video in March of 2018. So if I purchased a house for one of my tenants to live in, okay, if I was depreciating this house for 2018, when I did my tax return next year, I would take the cost of my house, okay, minus any land, because remember, land doesn't depreciate, and then take that resulting number times 2.879%. 2.879%. All right, that all of those numbers that you see in table 0.5 on page 712 are percents. Okay, the columns are the months of the year, generally January through December. All right, and the rest are percents. Okay, all right. So the rows are the recovery years. So you have year 1, years 2 through 18, 19 through 27, 28, and 29. Okay, all right, for residential real estate, and you have 1 and 2 through 39 and 40, okay, for non-residential real estate. So that would be the recovery year, okay, the recovery year, all right, between 1 and 28 or 29, or 1 through 40 if it is non-residential real estate. Okay, it tells you on page 712 that the tables automatically assume that the asset is placed in service in mid-month. Alright, so I am making this video on March 26, 2018. If I purchased an item of real estate this month, it's assumed that I placed it in service on March 15th of 2018, alright, or the 16th, in other words, the middle of the month. Okay, alright, and then finally, depreciation is reported on form 4562. Alright, an example of which is shown for you on page 715 and page 716. Okay, alright, the top portion of form 4562, okay, in part 1, it's called the election to expense certain property under section 179. We'll discuss that in the next video. Okay, if we're going to take any bonus depreciation on this asset, and again, this would be taken on personal property only, all right, that would be taken in part 2. All right, a Form 4562. And again, usually the bonus depreciation is taken first, thereby reducing the adjusted basis of the asset down to a lower value, and then you would take that new adjusted basis, all right, times the applicable amounts in the tables, and that would give you your total depreciation for the year. All right, the actual maker's depreciation is taken on lines 19 and 20. All right, 19 and 20. All right, if the asset was placed in service during the current year. If you had depreciation already on the books from prior years, all right, that would go on line 17 of Form 4562. All right, so you would take, all right, any Section 179 expense from Part 1, any bonus depreciation from Part 2, any prior depreciation on Part 3, line 17, any depreciation on assets purchased in the current year on line 19 and 20, and you would add all that up and you would have what the total amount at the bottom of the form. Okay, the very last thing that you see on page 2 of Form 4562 is two items called listed property, and there's another part in Part 6. There is a discussion of amortization. All right, we will talk about this in the upcoming videos.